Welcome back. You're watching Midcap Radar on CNBC-TV18. A couple of results have now come through. Look at Greaves Cotton. After its numbers, that stock has surged higher by almost 7.7%. When we look at the margins, they've seen a substantial improvement. Look at the uptick that has come in after the numbers have come through. Apart from that, we also saw Go Colors report its Q4 numbers. When we look at the margins here as well, substantial improvement on a year-on-year basis from 29.6% to 35.8%. A very strong up move on Go Colors, that is Go Fashion as well. The stock is trading higher by almost 7%. And apart from that, Crystal as well reported its numbers just a short while ago. The numbers were flashing at the bottom of your screen. The margins here stand at 28.54%. The stock as of now is up nearly 0.9%. But, let's also get in another management on the show. Capital Small Finance Bank is in focus on the back of its Q4 numbers. Profit after tax and net interest margin came in healthy. To discuss this and more, we now have Sarvjit Singh Samra, MD and CEO of Capital Small Finance Bank, joining in with us. Well, good afternoon to you, sir. My first question is on the deposits. Some banks have recorded strong deposit growth this quarter, but when we look at your numbers on quarter-on-quarter basis, it's a dip. Why is that so?
Actually, the thing is, we are a bank which were on a low CD ratio, which we feel. We were pushing our CD ratio. So otherwise, this was the reason why we had a calibrated deposit growth. Otherwise, just to give a color of a deposit book, we are 92.5% retail deposit. And where the CASA share is almost 37%. And we have been able to, in spite of the pressures on CASA and all, we have been able to maintain it. And otherwise, this was otherwise as per our plan. And there's nothing such of any kind of pressure on this growth or nothing like that.
Mr. Samra, good afternoon. Thank you for joining in. So what kind of deposit growth are you penciling in for FY26? And if I could club in one more question, according to the CASA ratio as well, which has also declined sharply, what do you attribute that to, and when and at what level do you see that stabilizing?
No, actually, answering your first question, in this financial year, keeping in view the present micro and macro environment, we are giving a guidance of 20% plus growth in our credit advances. And similarly to support that, we are the target for deposit is 16% plus to support that. And with this, since liquidity is high, and we want to further push our CD ratio, which last year also has resulted favorably on a net interest margin and of course on ROTA as well. And this is how we want to take it further. CASA, actually, we otherwise are, just to give quickly a picture of that, we are a CASA driven organization always. And it's a true sense CASA, where after conversion from a local area bank to small finance bank on savings banks, we were paying 3.5%, which now from 1st of May onwards, we have reduced it slightly from 3.5 to 3.35. And we have been able to maintain the cost of deposit 5.9 and the cost of funds at 6%. So we of course, there was a lot of pressure on CASA, which we have seen, but now I am very confident with the interest cuts. When the gap between the low-cost deposit and your term deposit increases, you see pressure on CASAs. But with now the rate cuts, two which have already happened, and we expect more cuts also in this financial year. So I see improvement in CASA going ahead.
Sure. Thank you so much for that. And, I'd also like to ask you about your NIMs, because when we look at your NIMs, they have contracted sequentially. Now, with the rate cuts, as you mentioned, coming in, with RBI looking to infuse a lot more liquidity in the month of May to enable rate transmission, what can it spell for your NIMs in FY26? What is the range that you're guiding for?
Yeah. First, I just want to apprise that NIM which last year, at the close of financial year 24 was 3.9. In this financial year, we improved it to 4.2. So with, of course, now the rate cuts and all, we will definitely, there's going to be a pressure on NIM, which I see in our business plan. We want to further improve it. First, our endeavor is to maintain it since the rate cuts have already factored in. So we want to maintain it. And of course, I see a further improvement to that, to the NIM of 4.2, which we have put on this fiscal. Yeah.
What about your bottom line, Mr. Samra? Other income had a significant contribution in the boost that you have seen. What is the nature of this other income, if you could specify that for us, sir?
Other income is a stable income, which is a fee income, of course. The fee income, and of course, it comes now from the partnership also, like the banca income. So since actually, otherwise, after our conversion, there were a lot of new customers onboarding, which happened in the last all these years now with the decent size of customer base, where like the deepening has started. Where like in our matured branches, I'm talking about branches which are say 5-year old, where like lot of deepening happens, and there's a further legroom available to improve it further this fiscal and coming in the coming time also.
Sure, got that. And one more question actually on your return on equity. That stood at 10%. 2 years ago, it was at 17%. So what is your outlook going forward for return on equity, that is ROE, and return on assets for FY26 as well as FY27, if you can share that guidance?
Yeah, actually, the 17% plus was like before raising our capital. We raised capital last year. So there was a fresh infusion of 450 crores of fresh capital. So this is the reason, since over a period of time we are consuming this capital. So I think we'll take it up to the level where we have earlier done the capital raise, and then we'll think of raising the capital further. So it's a journey. So since the capital was raised recently only. So we are well consuming, it's a growth capital. We are well consuming the growth capital, and we'll consuming over the period of time, and further capital raising we aim after we reaches at that optimum level of return on.
Right. One final question, Mr. Samra, very quickly, if you could tell us, what are your current cost of funds and what are you expecting them to be as the year goes by?
Current cost of deposit is 5.9 and cost of funds is 6%. As rate cuts are coming in, already we have repriced our savings book, which earlier was 3.5%, which now 1st of May, it's going to be 3.35%. And even bulk deposit, we have done a cut on the bulk deposit. So I think the both should go down as we move towards in the next year, and we expect more cuts also.
Sure. Thank you so much for that. And, thank you so much for giving us those insights on your numbers. But from one